Happy Tuesday and welcome back. I am Josh Lewis, and this is Vetted VA Live, where we get together every week. We get several of the vetted expert realtors and mortgage lenders and answer or go through a topic that is timely and relevant in the current market. And what we're going to talk about today is a little bit unique. We're going to talk about what costs a veteran can pay. The reason why I say this one is unique is that we don't normally need to get together and do a pre-call. We'll have some text messages and emails back and forth. We'll work out an outline of what we want to talk about and what's important for you as a veteran, borrower, buyer to know. In this one, there are a lot of quirks and details. So what we're going to do is go through in the best way possible of just giving you the information that you need, the high level important stuff, so that you can analyze offers from different lenders, deal with escrow, with knowing what you're going to have to bring in at closing as best as possible. If you have any specific questions, anything that's come up in your transactions, anything you want to know, by all means, go over here and ask them in the comments, and we're happy to go through those. But I'm happy to say I've got three great experts with me here today. On the top row here with me, we have JD Matthew with Nexa Mortgage out of San Diego, California, although he's approved and helps borrowers in many states. I've got Adam Baumline with Stratton Mortgage in Dublin, Ohio, giving us another perspective, more of the middle America view of it. And then Carmen Pincus is a realtor with Century Residential in Everett, Washington. And on this topic, it's really important that we get that realtor perspective so that you know exactly how this works and how we're structuring deals and contracts. Why don't we jump into it? So when we're talking about what can a veteran pay, the reason why that question gets asked is 15, 20 years ago, there was a substantial list of things that borrowers were not allowed to pay. So we always knew that if you were going to write a VA offer, okay, what are the VA non-allowables? What do we have to ask the seller to pay? So why, JD, why don't you walk us through, why does it matter what the veteran is allowed to pay and what they're not allowed to pay, and kind of to different parties in the transaction? Why don't you talk about the lender side, and then we'll have Carmen give us the realtor's perspective of why that is important to know going into the transaction.
Sure. So, in terms of what the veteran is or is not allowed to pay, uh, one of the main things would be any realtor fees, any buyer realtor commissions. Uh, that's been part of the rules since pretty much forever, and so that's one of the main things that the veteran is not allowed to pay. There are other items as well that depend on if there is a origination charge on the file or not. But like the big no-no that we run across a lot of times would be anything related to realtor fees.
And we had talked about this a little bit earlier. One of the things that's common, that wasn't common, say 20 years ago, is a transaction coordinator fee. And the realtor showing that as a line item on the transaction. How does that relate to commissions? And is that something that a buyer would ever be allowed to pay?
Well, the interpretation will be very different depending on what lender you're working with, right? And so when we talked earlier, my reasoning for it was that before you didn't necessarily need a transaction coordinator on a file, but now you do. And sometimes a realtor will want to pass that fee along. The way the VA guidelines are written, though, uh, just say specifically no realtor fees should be paid by the veteran buyer. And so I believe right now it's like being interpreted as that's lumped into the commissions as well.
You said something really important there, and kind of why this is a difficult topic to give clarity on is I'm a broker. JD, you're a broker. Adam, are you a broker as well?
Yeah, I'm a broker.
So for each of us, we might have 25 different lenders we can send it to. And as crazy as this sounds, many of them interpret some of this stuff differently. You can call three different lenders and get three different answers on it. So we're not just talking about, hey, you talk to big online lender, or you talk to local bank, or you talk to one of us. The different lenders that we may send your loan to are going to interpret some of these things differently. But for the most part, would you guys say that the veterans are allowed to pay the cost, the standard and traditional costs in most transactions. We're going to get to a special type of transaction later in the conversation, but in most transactions, is it fair to say that a veteran buyer can pay the same costs that a non-veteran would pay with their conventional or FHA or USDA mortgage? You have any thoughts on that, Adam?
Yeah, I mean, pretty much outside of that specific realtor transaction fee, there's not a huge differentiator between conventional FHA, VA type of that. Like the veteran buyer can still pay those standard, if you will. You're doing a regular, you got your outliers there, but for most transactions, there's not something that says that they can't pay something that's going to be out of the ordinary.
So when Carmen calls you, Adam, and says, "Hey, Joe Buyer and Susie Buyer want to write an offer. It's VA. What do I have to get the seller to pay?" What is your answer to them?
You don't actually have to get the seller to pay anything. The seller is not required to pay anything for the VA loan. That's where the communication between the lender and the realtor is important, because depending on how you want to structure that deal. But from the standpoint of what can the veteran pay is pretty much the same. What the seller doesn't have to pay something per se, right? And I think that's a pretty common misconception that we hear even a lot within vetted VA is, hey, the seller, they said the seller has to pay these fees. We don't want to accept the VA offer, but that's not true.
And that's been a big thing the last few years, because a tight market, lots of cash buyers, big down payments, people waiving appraisals, and the VA got a bum rap because 20 years ago there were a number of things that the way loans were structured and the way the guidelines were written that a veteran couldn't pay. So Carmen, from your perspective, you specialize in representing veteran buyers and sellers in an area where, whether they're a veteran or not, may be accepting a VA loan offer. What is important to you as a realtor and to your sellers to know about these charges and how similar and modern VA is today relative to other loan programs?
So, being where I am in Everett, Washington, it's traditionally been a very competitive area, regardless of the last 2 years. Even past that, it's quite competitive. And my personal opinion and what I see, especially with VA buyers, is that because there aren't those restrictions on fees that a seller has to pay anymore, it actually makes the VA loan much more competitive in our area. VA loan purchases only make up 7% of purchases in our area. That's small. And so those old guidelines are a stigma against VA loans here. And so I always look for, with my sellers, if it's a buyer coming in that's using VA financing, who is the loan officer on there? What company are they working for? Are they retail? Are they a broker? Are they one of the big nationwide online kind of companies that market to military a lot? Because it matters. Those fees can add up really quick, and it could end up charging my seller something, but we're going to talk about that later. But there are circumstances where the seller could end up paying some of those fees on behalf of the buyer, but it's in very specialized circumstances that would happen. But by and large, there's nothing extra. I mean, the VA loan is honestly just as good or better than conventional FHA, USDA, anything else out there.
So I know from our perspective on the loan side, the two most common misconceptions I get. So we're in Southern California and we have a lot of big loans. I've done several VA loans over $1 million with zero down. So when you write an offer like that, we always get the question from the realtor, well, they can't go that high. And so at post 2020, no limit other than what lenders place on that. But the more common one of the two most common is, well, what does my seller have to pay? Well, hey, we've got this VA offer. What is it that it's going to cost my seller to accept this VA offer? Adam, JD, is that safe to say that's something that you get a lot when you're sending out your pre-approval letters?
Absolutely. I totally get that so many times, especially in regards to wood destroying organism inspections and repairs. And so that's one thing that sellers are usually, or at least listing agents are usually wary of, because technically if you write on the contract that the seller will pay for a Section 1 clearance, it feels like it's almost a blank check.
Yeah.
But now the veteran's allowed to actually pay for that if they want to.
And that's a recent change. That was sort of the final piece of the puzzle. So for us in Southern California, wood destroying pests are a big thing, and it was really the only program where we had to talk to the agents up front and say, make sure you get an inspection, and we're going to need a clearance. So it was always a big concern. But as of, what was it, like March, April? Now that's fully modernized, and the seller doesn't have to pay any of that. So either the report or the clearance, our buyers can pay for that. So if you're a veteran buyer watching at home, you may be saying, well, this doesn't sound good. It sounds like the program changed, where I used to get all sorts of these things paid for me, and now I have to pay for them myself. Carmen, if you had a veteran buyer saying that to you, how would you explain to them that this is actually better, that their loan program is more similar to other loans than different?
It removes that stigma by making the fees equal to other loan programs out there. It helps remove that stigma. What we saw the last year and a half, 2 years across the country, and it's still going on in some parts of the country, this uber competitive appraisal waiver type market that we're seeing. Why would a seller want to pick, even if it's the same offer price, why would a seller want to pick something where there's the chance that they're going to have all these extra fees to pay that they wouldn't have with another type of loan product? And so they're allowed to kind of, discriminate maybe against that loan product because it's going to hurt their bottom line. And so I always tell people, the more freedom you have with your choices, the better. So fewer fees, the more freedom you have in choosing.
And it doesn't mean that the seller can't pay them. It
Correct.
just means that they don't have to. So when we get to a market,
Right.
Like we've transitioned to this year, you can ask them to pay any and all of your closing costs. I started doing this in '96, and one of the very first things that I had a veteran agent come to me, he said, you guys can do a VA no, right? Well, it's funny, that was the nomenclature then of what people call it. It was basically no down, no closing costs. You're like, oh yeah, well, cool. Of course we can do that. No one says that anymore. But back, 20, 30 years ago, that was what they called it. So that a veteran knew that you can truly get into a home with nothing out of pocket. But what we're talking about today is the fact that the seller is not required to pay any of those things for you, but they are allowed to pay any of them for you. With that, anything before we kind of transition into some specific types of situations where we could run into limitations, any thoughts from you guys as before we move on as to anything we haven't covered?
I think that the wood destroying inspection is probably the biggest hurdle. In some cases in my area, it's really not that expensive, but again, it just adds that stigma of, the seller has to pay this fee, and it's not true. And there's ways to change that. And it can change your offer. It can, surprisingly, it can change the perception of that to the seller and whether or not they accept your offer. I've had that happen. I don't know if that was the only reason, because obviously I'm not one of the realtors that's negotiating, but it was brought to my attention, and it was something that needed to be addressed. So it can factor in there.
Well, we actually have, this isn't a question, but a good comment here. One of the viewers here followed up with that change that we recently had also allows the buyer the option to choose termite companies. Before, potentially one of the downsides is, hey, seller, you got to pay for a termite clearance. Well, they get to pick the termite clearance company or the termite company, and they might use a cut rate company to save some money. This way, you're able to get a couple of inspections and figure out someone that you're comfortable with. So I thought that was a good and important topic there. So sort of along that, kind of what I want to talk about from the seller's perspective, the question behind the question when they reach out to us and they say, well, what does the seller have to pay? Or when the realtor asks, what does the seller have to pay? I think it's important for everyone to know that to a seller, other things being equal, if they were guaranteed of the transaction closing, whether it's loan, whether it's just performance from the borrower, they're looking at the net. Do you want to kind of explain, Carmen, what that means? Why a seller? Really, an offer price is fantastic, but again, if all of the offers are equally likely to close, what does it mean to your seller in terms of looking at the net, the difference between their net at closing among different offers and different types of offers?
Well, yeah. So one of the things I like to do is just have out a spreadsheet. So if we were in one of those markets again where we had multiples, and maybe we have a conventional, we have an all cash, we have an FHA and a VA, and we line them all out, knowing ahead of time what the allowable fees are and non-allowable fees are, it makes it a lot easier to show it to a seller dollar for dollar, what they're going to be taking away from their net proceeds, basically when the sale closes, and being able to not have to account for the wood destroying organisms, or not having to account for this escrow fee, or not having to, those can be $1,500 in some cases. I mean, they can be really expensive. So having all of that lined up shows the seller clearly that this VA offer is going to net the same as this conventional offer. There's nothing hidden in there. There's no surprises. It is what it is. It is the same. It's competitive.
Sort of that same topic of the net leads us back. That pre-call that we had earlier today, you were talking, without naming any lenders specifically, you said there are a few lenders in your area that are just throwing in box A of the loan estimate 1 point. They're charging 1 point in fees, and this will allow us to kind of transition to that special situation where we have to say, what can a seller pay, what can a buyer pay. But with that, do you want to tell us, one of the things that you had said specifically is that the lender's like, well, we're just going to ask the seller to pay for it, so it doesn't matter. But how does that relate back to you and your spreadsheet showing the sellers the net, and why it matters what lender you're working with and how they're structuring your VA loan?
Right. So if we're working, if my seller's choosing an offer from somebody who's working with one of these big box lenders that market a certain way, and they say, well, I'm going to charge this 1% origination fee, but it doesn't matter because the seller can cover all your closing costs anyway. So that's going to be billed to the seller. Okay, well, we can ask the seller to pay it. But that's 1% above these other charges, above, prepaids and such. So it adds a lot to the seller's, it takes away a lot from the seller's bottom line. And 1% doesn't really sound like a lot, but what if you're in an area where $500,000 or $600,000 is the purchase price? You're asking a seller to come lose another $5,000 to $6,000 that may not even be a necessary charge. It's only necessary because of that particular lender's requirement to get you that rate.
Got it. So one of the things, and someone had asked a question here, and I think if you're watching on Facebook versus YouTube that this got posted, someone said at the end, can you post an itemized list of allowable and non-allowable fees or provide a link? It looks like someone posted, I can't see the link here, but it looks like someone actually posted that link. And what you're talking about here is if a lender on a VA loan chooses to charge an origination fee, it's limited to 1%. JD, why don't you kind of explain to us, again, without going too inside baseball, what that means? And it doesn't just mean 1% plus other fees. There are fees that, if the lender is charging them, have to be included in that 1%. How does that work?
Oh man, this is the part where it got
This is where it gets hairy.
Okay, so basic 10,000 foot view. When we were talking earlier, there's two different models, banker or broker. Normally, if compared to apples to apples, they're the same. Basically, the banker and broker gets paid based off of what the interest rate is offered, and et cetera, et cetera. If a banker decides to charge 1%, it's basically extra income for them. If a broker charges 1%, they're basically cutting their compensation down to the bare minimum.
It becomes their it becomes their only income, right? It's like that 1%
exactly.
is it. There's no additional money to a broker if they do that. Whereas if it's one of the big box lenders that Carmen's talking about, and they do that, they're going to sell that loan and they're going to make a chunk on the back, much bigger chunk than that 1%. So it's really just adding some funds in there. Is that correct?
Exactly. And so where that makes a difference is that since you're charging that 1%, there are certain fees you cannot charge the veteran. So they have to be included in that 1%. So for example, underwriting fees, which it's lender dependent, but you also have the settlement fee. So when you're having a transaction, you have the title fees, and then you have the settlement fees to be able to be the middle men to manage the funds and make sure everybody gets paid properly, and that you get free and clear title. Now, that has to be part of that 1%. And depending on what the loan amount is, there may not be enough room to actually cover all those fees.
And that's interesting. So Adam, why don't you walk through that? So JD and I are in California. JD lends in other states. I don't lend anywhere other than California. And for the most part, it would be really hard to find a single family residence under $400,000 in the state of California. Some of the rural areas you could, but that 1% rule at least gives you $4,000 to work with. In Ohio, not in the major metropolitan areas, but some of the more rural areas, it might give you a lot less to work with. How does that work in an area with a much lower price?
It can make a much bigger difference. And so it's not just you could pick any state that's not necessarily a high cost state. Again, like I know Carmen and I were talking the other day where like the average new bill was like 800,000 in her area. So that's $8,000. So that's a lot. If the lender is charging a $3,000 origination fee, there's still $5,000 that can be used for the other costs. Whereas let's say I go to Southern Ohio and it's $125,000 purchase. Well, that's only $1,250 at 1%. What if the lender underwriting fee is $995? You got the title closing fee, you've got other credit reports, things like that. Now it makes a bigger difference when the loan amount is smaller, because some of those fees are not based upon a percentage; they're a flat number, right? But the 1% fee is, of course, a percentage. And so that's where it can really affect, depending on where the veteran is buying in the country, or in the state. It just depends on what those prices are, really. It can make a big impact.
I would like to add that there are fees that are allowed as itemized fees. For example, the credit report, the regular VA appraisal, and all that stuff, that's besides the 1% origination fee. And so there's also a list of other fees that are not allowed when you charge your 1%.
Mm-hmm. Correct. Yeah.
And Adam, why don't you talk about how, first of all, what a lender credit is in that type of situation and how that impacts some of those charges?
Yeah. So you're, again, high level because you'll have your lenders and your brokers. A lender can choose, or a bank can choose to give you a lender credit that can be X dollars or whatever they would basically choose to do. As a broker, the lender credit would basically come the pricing of the rate as the rate gets higher than what the market rate is. There's extra money that's there, right? Well, as a broker, that we cannot keep that. It has to go back to the consumer. So if depending on where the pricing at, if the rate pays back $750, for example, that's a credit to the buyer that they can use. At $750 worth of charges that could, depending on the scenario, help to offset some of those.
Offset that 1%.
Yeah, or just other fees that they have. Yeah, or other fees that they have, depending on how this loan is structured.
Okay. So from a buyer's perspective, hopefully what you're seeing at this point is we have a very modern loan program that looks like any other. It's important in who you work with. Most importantly, I mean, when we're talking, the conversation today is what does a veteran have to pay? What is a veteran allowed to pay? And the question there is, how much do you have to have at closing? We got zero down payment, but how much money do you have to have behind that? So when we're trying to answer that question, that's where we're at is looking at this. Any thoughts that you guys have in terms of selecting a lender beyond just the costs, but what is important in being able to work with both realtor partners in this to make them understand? Because it's not, I mean, Carmen is unique. Carmen, you said what, 7% in your market, which is actually a pretty heavily VA market. I mean, that 7% market share is pretty big for most parts of the country. But even there, what percentage of realtors would you say are well versed in VA financing?
2 or 3, 4,
Yeah.
maybe. I mean, maybe that are well versed. most just don't come in contact with it. Now, I am stating like north of Seattle. If you're looking south of Seattle, you've got JBLM, which is a huge, huge installation. So VA does comprise a little bit more of the market share there, but it's not a crazy amount. We're not talking 25% or anything like that. It's still smaller, but they do come across that much more often than north of Seattle. And it's not many. And it's kind of an uphill battle a lot of the time, explaining to somebody like what's allowed, what's not. And that's where the handbook comes in, and you screenshot it and you text it to them and say, look, this is correct. Your seller's not going to have to pay anything. I promise you, we're good. We're not using the big box lenders. You're not going to have anything extra. Like, buyers are paying their way. We're good.
From that perspective, you're unique in that you know that piece of the financing to be able to sell to a listing agent yourself without having to get one of us involved. But Adam, JD, what does your role become in that situation in terms of your veteran buyer is putting an offer in? What do you guys do to make sure that the listing agent is understanding what we're talking about today, and that it's not going to negatively impact their seller's net if they accept your buyer's offer?
So it's a good question, I think part of it depends on what area you're working in. So for me, if I go an hour west, we have Wright-Patterson Air Force Base. So huge military installation. There's actually an Air Guard base in Springfield, which is very close too. When I do transactions there, of course, the agents in that area are actually very well versed with VA loans and understanding them and how it works. And there's not as much explaining about the VA loan that you have to do. It has more to do with lender communication and letting the sellers know that, me as a lender, I have all their documents and I know they're approved and I know they're, whatever the situation may be, they're ready to go. Now, if I come here to Columbus, not nearly the highest percentage of agents that would understand the VA loan. And that's not a negative against the agents. It's just they're not in a market where there's a large military installation. So now I have to go a step further and explain some of the benefits and what the seller doesn't have. There is nothing that the seller has to pay, and some other benefits on the appraisal and some things that we can do post closing, and just explaining more so that the agent feels comfortable, but also knows that myself as a loan originator, I know how to handle the VA loan, and I know how to go through some of these hurdles if they're going to come up. Makes it more likely that they're going to accept my offer. Because they know I know what I'm doing, or I know where to go to get the answers if I don't know. So,
and I'm sure I do this on all loans, but VA, we triple make sure is that we ask the agent, make sure you copy us and let us know the offer is going over. I want to preempt these questions and get ahead of it as much as possible, because sometimes the agent's just not assertive enough to pick up the phone and say, hey, Josh, hey, JD, tell me about this. I think my person has to pay, or my seller has to pay these things. Is that accurate? So if we can jump out and get ahead of it and answer those questions and preempt the negative thoughts before they ever get to presenting the offer to their seller, it goes a long ways for us. So again, we're covering a really complex topic when you're looking at it on the back end. I think we've done a really good job of making it pretty accessible and understandable for you guys at home, wondering how this affects you as a buyer. Before we wrap up, why don't we just kind of go around the horn? JD, any additional thoughts that you have, or anything that you would want buyers or sellers or agents who may be watching to know about what is allowed to be paid with VA on behalf of a buyer?
Sure, absolutely. One thing that we didn't discuss would be appraisals. The borrower is allowed to pay for an appraisal, but compared to conventional FHA, you cannot rush a VA appraisal. And that's where, when I call and speak to the listing agent, I can quote from the guidebook what the turn time is supposed to be. The second thing that we usually address are minimum property requirements. Whenever I'm calling a listing agent, we discuss that with them. And last but not least, I remember in our pre-call, you had mentioned this, box A. Basically, to compare apples to apples, if there's a percentage or if there's a dollar amount, compare them together to see which one's coming out the best. So, for example, you might have let's say 5.5% charging a 1% origination fee. You could get the same thing from somebody else with 5.5% with a $1,300 underwriting fee. Now compare how much that amount is, and then you'll get a good idea of like who's charging more.
And that's important because there are people in our circles even, they get really dogmatic about box A should be empty. There should be nothing there other than a valid discount point if a buyer chooses to pay it to buy down the rate. And I absolutely get that when I am talking to folks, because like Carmen said, agents aren't super thrilled to work with out of area big box retail lenders. So the comparison, we know that veterans as a group are marketed to aggressively by some of these lenders and have relationships. Maybe it's an auto loan, maybe it's homeowners insurance, any number of things. So I would never tell someone to not shop with them. It's always a good idea to get 2 or 3 quotes. Call them, and they are going to have stuff in box A. That does not immediately make a lender or a broker with nothing in box A better. My perspective on it is to look at every charge in box A on the loan estimate, whether we call it an origination fee, discount points, processing, underwriting, admin. There's a handful of things that items in box A can be called. Just call them points. So what is my interest rate and what is my box A charge? And that's the points that I'm paying for that rate. Ignore the noise of how we're adding it all up. And that way, if you call your local bank, you call Navy Federal, and you call Adam, that's really what you're comparing, because on a purchase, for us, we don't control any of the other boxes. That's pretty much dictated by the program and the locality of what's going to be there. But the lender absolutely controls box A. And at the end of the day, you want the best combination of low rate and low box A fees that fits with how you're trying to structure your transaction. If you want the lowest rate, you're going to have some costs in box A. If you want if you want the lowest closing costs, you'll take a higher rate, and box A could be completely empty. But it's an important thought in this context, and especially when we're also thinking in terms of what can a seller pay for you, not necessarily what they're required to pay, but what they can pay for you. Adam, any additional thoughts that you had that you think the viewers at home should think of?
Yeah, I would say that we've seen pretty consistently here lately in VA questions about the transaction fee, and with the VA loan. So that's one thing to look out for. JD mentioned minimum property requirements. For me, when I get a contract in, I actually do go look at the photos online. If it's a newer home in a newer subdivision here in Columbus, you're probably not going to have any issues. But when I go to Eastern Ohio or Southern Ohio, or even downtown where that home is built in the 1800s, there's some things that we need to look for, right? That could be an issue that we would like to try and address up front, or maybe even address in the offer, when they're looking at the offers. And then lastly, I just think that communication is a big thing. Rate and cost are important, but it's also who's the person that if you're the veteran buyer, who are you talking with on the other end of the phone, or if you are going in their office, which is kind of rare these days. But do they know what they're talking about? Are they giving you answers? Are you getting the runaround? You don't really get what you need? That's important, because that person might not be the cheapest. Maybe they're $500 more. I'm just picking a number. Maybe they're $500 more, but you're getting the answers and the things that you need. That's going to create a less stressful process, which is key. None of us can make it stress-free, right? It's stressful, especially when you look like a PCS situation. But if we can eliminate a lot of those stresses out of there, that's a big deal. That's important, and that's not something you can necessarily place a rate or a dollar amount on.
Absolutely. And I always tell people, by all means, shop 2 or 3 lenders. Please don't make your decision on who's quoting you the lowest rate and lowest fees. If you talk to 3 lenders, one of them is probably going to be out of the range, and 2 of them are going to be pretty darn close. Go with your gut. You're going to be working really closely with this person for 60 to 90 days in a best case scenario, because it usually takes you 2-3 weeks to finish your pre-approval and find a property and get it under contract, and 30 to 45 days to get the deal closed. So it really is important that you have open communication. The person hears you, understands you, and gives you direct and clear answers to what you're asking. And I laugh because it sounds crazy when you say it out loud. But how often do you guys hear from someone, well, I talked to this guy and he just talked around in circles. I have no idea what he was even talking about. Or I asked a direct question 5 times and couldn't get a direct answer. Or the answer that I got back sounded crazy. And when you tell me, well, it is crazy, that's why it sounded that way. So definitely like that. So last but not least, from the realtor perspective, Carmen, what do you have to add to this conversation, and what's important for the folks watching at home to know?
I think 2 things. So one, on the loan cost side, if somebody tells you 1% origination fee is normal and that's what people charge, don't listen to that. Shop around, because it isn't normal, hasn't been normal for a while, and there may be a good reason for it. That doesn't mean it's the right reason for you. So shop around. The second thing is, when it comes to, so we've seen a lot of questions in Vetted VA recently regarding real estate agent fees, fees being charged by the real estate agent in some capacity. It could be through their brokerage. It's probably entirely through the brokerage, because that's where all commissions are supposed to go. Transaction coordinator fees, not allowed. If there's just a transaction filing fee, which is a completely normal fee that most agents get charged, and that's just to process the paperwork for the transaction. The company usually has somebody that does that for them. That can't be passed on to the veteran buyer. Now, one thing we probably should clarify in all this is that this is very much specifically VA loans that we're talking about. It's not if a veteran or military member is going to use a conventional product or any other loan product. These are specific to VA, because we did have that question in the group not too long ago, and it turned out they were using a conventional loan and those fees were allowed. It's just not with the VA loan. So their veteran status doesn't play a part. It's the actual utilization of the VA loan product that triggers all this. But those real estate brokerage fees, they're just not allowed. That's a cost of doing business on the behalf of the real estate agent, and that's the real estate agent's cost. If you sign a buyer's agency agreement with somebody, they show you 79 houses and you end up not buying anything, and they want to charge you $500. Can't pay it. If you're going to break your contract early with them on the buyer side and they want to charge you a fee, you can't pay it. It's what they took on when they took you as a client. It's not something that you should feel bad about. That is what they should know when they take that on, and it's not allowed.
Absolutely. So again, lots of good information here. It is a difficult topic. If you have additional questions, if you're watching this a week from now, 2 months from now, go out to the forum and ask your question. There's 2 reasons why we do this show every week. One, most importantly, is to cover topics more in depth than we can just writing text responses to people's specific questions. In 40 minutes to an hour, we can just go a lot deeper on a topic and give you guys more insight. But almost of equal importance is let you guys see who's answering the questions. It's not just some random person on the other side of a keyboard. These are folks who have gone through extensive testing, who have experience, who are helping veterans every day go through this and know all of the details. They're not lenders who happen to find you as a buyer and go, yes, we offer VA loans, even though they've never done one. And they're not realtors who, I've represented a buyer with VA financing before. They know the ins and outs of all of that. So love to put a face to the names behind the keyboards for you guys. So again, any questions that come up later on, make sure you go out to the forum and ask. If you're in the process, you want a second opinion, if you want to start the process and see what you qualify for and what it looks like, go out to the map. We've got vetted real estate and mortgage experts throughout the country, and they're waiting and happy to help you in any capacity they can. So again, thank you guys for joining us tonight. I appreciate your knowledge and expertise and sharing it with us. And everyone out there, have a great week, and we'll see you next Tuesday.